Hello, how are you? Hopefully you are doing well. So today I'm going to cover the ETFs which is on the US market. So basically this criteria which I have selected is mostly on the large cap and has low expense ratios. Also we do have the dividend which can ETFs which has very high in terms of the dividend yields, but maybe also I find they have very high expense ratio and doesn't do well. So these I'll try to show you the top 3 and 4. So hopefully you will like it. So let me know if you have any of your favorite, but this is on the large cap market side ETFs. Okay, so let's get started. Who are new to my channel, let me give you some introductions. I'm Pramod Kumar. I'm a CFA chart holder and FRM certified, and usually on my stock portfolio I try to cover the long terms investment perspective. So I did a lot of video series on the stock analysis, which is like Nightshare, Facebook, Apple, and you can check on my channel, and I have some videos on the basics of investing as well, where you can see the CAPM model, the how to get the required return on equity, and so on. If you're even new, I think I have also one more video on the basic of investing as well. So feel free to check out my video, and if you like it, do please subscribe and like my channel. So okay, so that's been said, so let's get started. Okay, so the very first one which I'm trying to cover, I'm trying to hide my face so you won't the screen won't get cut. So the very first one which I want to show here is the HDV. So HDV is the issuer is the BlackRock. So this is the dividend, basically high yield dividend exposures to the low cost package, right? So that's on it. Expense ratio is only 8.08 or percent, and this is a open structure. This is started in 2011, 29th of March, and assets under this ETF is 5.67 billion. So the yield here is showing is 4.30%, right? And this has the so this iShare core high yield dividend ETFs, right, is also ranked on the MSI ESG fund rating perspective, the A. So this is the first one, and if I track from, this is not very old, so we have 5 year of data, so pretty much this is how it goes. But on the dividend yield perspective, it's giving good dividend yield, and the issuer is the BlackRock here, right? So that's on this side, so it's not that bad in terms of you see on the return as well, right, how it's going. So the investment, how this next thing we like to I usually like to see is how it's invested. So it's invested in these top 10 sector, which is energy, health, telecom, consumer non-cyclic. So energy is 26% here, and technology is very less, so it's not that risky if you can see from that perspective. And the top 10 holding is AT&T, which is almost 10%. Same thing on Exxon Mobil, 10%. Verizon, another good stock, is almost 7%, and Coke, Cisco, and PepsiCo, right? So these are the top 10 holding. So that's, and the right, so the expense ratio I think is so that's on this side, the expense wise is only 0.08. So that's on the first ETFs. So the next one on the similar chain, I like to cover the SCHD. This is issuer is the Charles Schwab, and this is under the brand of Schwab. This is only 0.06% in terms of the expense, and pretty much this is captures the pretty wide range of the market. So this Schwab, US dividend equity ETFs is on the same channel, right? So it's in terms of the asset under management, how much this fund has is 11.31, almost double of what SDV has, right? So this is not like in the terms of ranking. So this is you can rank in terms of the dividend yield if you like. So this one has a little bit lower in terms of dividend yield, which is 3.62 as compared to SDV, which has the 4.30. So if you want to rank in terms of that, you can do that. But pretty much from the cost perspective, these are all low cost and high dividend yield focus, right? So I'll hide this one out. So if I'll see from the return perspective, it's doing pretty good in terms of this return. It's giving 5-year 8.55%, and as compared to Dow Jones index top 100 is pretty matching that one, so this is pretty good. And if you see from the exposure perspective, so good thing about why I have picked these one, this is very broad in terms of the exposure, right? So not just like one sector. We can do in future pretty much exposure to one sector. If you want, I can select some ETF which focus especially on energy or technology, or there are so many variety there, right? So I can do that. Let me know in the comments. Or if you want me to pick up, rather than ETFs, some single stocks which focus on, I don't think so I have did any energy. Maybe I'll do that because it's pretty down in terms of the valuation, right, for this year. I was reading that, so maybe it's a good time to invest in that on the low price. So let me know, put in the comment, right? So it's give me motivation as well to do that. Okay, so the good thing, okay, so the expense and all is down. So that's so you see is 0.06%. I think dividend yield is 3.62, and PE is not that bad, right? And good thing about these ETF is trade like a stock, right? So you can sell anytime, you can buy it, so it's pretty good. Okay, so the next one is is YVM. YVM is again from Vanguard, and and one more disclaimer here. I'm just giving this independent review just for fun. If I want to invest, I'm not anywhere involved in selling or anywhere linked to this company or getting anything, so, or any other exposure which I do on my channel. So that's been clear as well, and usually I put that disclaimer in my video description as well. Okay, so and this one is, if I want to invest, for example, I usually do and go invest here. Okay, so this is again very low, as you see from the expense perspective is 0.06%, and asset under management is even further higher, right? So this is 25.77 billion. So these are not small, right? So we are going higher in terms of asset under management, and expenses lower as well, right? It's launched in 2006, so very long. It's good, should have a very good history. The dividend yield is again 3.82, which is pretty good, and it gives good. And this is again the FTSE high. So this is called Vanguard High Dividend Yield ETF, and again the ticker is, you can see here, VYM, right? You can on the 10-year trend, the history wise is pretty much mimic good the high yield dividend the index, so it's pretty matching that 11.24%, which is pretty good. So that's one good thing about it. Okay, so next one which I would like to cover is SDY. SDY is not by Vanguard, is by the State Street, and SDY is launched in 2005 in August 11th. Is open-ended. One don't think I like about it, but I just picked it, is the expense ratio is 0.35% is a little bit higher than what I have seen. And the reason why I have picked it here is to show it doesn't mean that expense is higher, right? That the return is good. The dividend yield is, as you can see, is even less, 3.9, and the 10-year yield is 10.95, right? So, but it's not bad, right? It's all about different composition. If you want your ETFs on broad base, these are all broad base, right? But if you see, its exposure on the financial is 24%, right? As compared to the other one, right? Maybe I'll show you here. Let's do YDM, right? It's 15%, and this one is higher, right? So don't go just from these are all low percentage ETFs, but all its sector allocation as well. So think from that perspective. But overall, I think the all are doing pretty the same ballpark if we see the 10-year historical average. But from next 10 year, what you can think which one will be doing well, right? So you can pick from that if you want to see from your perspective, right? But whether you invest in SDY or you invest in VYM, right? So because VYM here is 17% and 15% in healthcare, and technology is 11.73, and here SDY is 24% in the financial, and technology is way low, right? So if you want a low risk perspective, I think this is a little bit better, right? But right, so because usually technology seems to be a little bit more risky as compared to the others. Okay, but anyway, this is just another 2 cents on that one, my 2 cents, but overall all should not be bad. And again, these are all in US, these are all US based. The next one which I like to cover is VIG. The issuer is again Vanguard, and this is the low expense 0.06. The good thing is, even if the return is higher, but if there is a higher expense, what's the point, right? It get cut by the fees. So I like these low expense ones, and hopefully you agree with me on that. Asset under management is even higher, $42 billion. The dividend yield on this one is 1.41, which I really don't like. So that's why I keep it at the end. So that's one of the reason, right? And the price to book is a little bit higher as well here. So, but overall, anyway, this is another one. If you want to have a look, the 10-year history is pretty good. From that perspective, you can rank a little bit higher, as from other perspectives 12% rather than 10 or lower percentage. And for sure, this has maybe it's coming the growth more of the dividend from the technology and other sectors, right? And so that's it. So in this one, it has maybe I should cover this. So top 10 holding on this one is Walmart, Microsoft, Visa, and all, and some on the Home Depot and PepsiCo. And if I come here on the SDY side, this one is, you can see the top percentage here is only 2.39%. I think that's also good to see, right? And here is 4% highest, here is only 2% highest, right? So this means these are even further very diversified, right? If I see from VIM, let's see, VIM is also top one is 4% and rest is lower. Let's see others. SCHD quickly. This is again 4%. United Parcel, Qualcomm, interesting. BlackRock is 4% range, and HDI is, wow, this one is a little bit higher in 10%, right? So if from that perspective, this is not well diversified, because one holding is giving 10 and this is even 2 stock is 20. So from that, I'll put a lower weight honestly on this one if I want dividend, but I also want same time in ETF. The reason why I invest in ETF, for sure, I want diversification, right? If 3 stocks giving me, if just 2 stock giving me over 20%, maybe not, but then, so this thing you need to depend how, because each investor is different, right? Some people just want to see the dividend yield perspective. Some I just want to give you different flavor, right? So based on that, these are all low cost, but depend which sector or which segment, which holdings you want to see, right? So that you can pick right? Because all it depend upon your portfolio, but overall seems like all are pretty okay. So sorry about that. So let's so this is pretty much it. So that's it on this ETF site. So if you like it, kindly subscribe and like my video, and let me know if you have any of your favorite ETFs, any of your favorite stock you want me to cover. Please put in the comments, and more you like it, gives the thumbs up, the more people will also get the same knowledge and share, and we have the more spread out this knowledge to all, right? So thank you for your time. I really appreciate you spend your time with me too on this. So okay, see you in the next video. Bye for now.